Okay, good morning. Discuss ko ngayon yung remaining topics natin sa AC113, which is yung Module 21 tsaka yung Module 22. Mag-start muna tayo sa Module 21, okay? Lesson Preview. Welcome back to AC113. Let's continue our 21st day in accounting for business combination by activating your prior knowledge through answering the What I Know chart, Part 1 and Part 1, Activity 1. Do not worry if you answer the questions incorrectly. That only means you do not have prior knowledge of the subject. Pakigawa to yung activity 1. Okay, main lesson tayo. Past 22 prescribe the accounting and disclosure requirement for investment in subsidiaries, associate, and joint venture when an entity prepare special separate financial statement. Ibig sabihin, ito yung for parent entity, hindi yung for consolidation. Sige nga. Separate financial statement are those presented in addition to consolidated financial statements or the financial statement of an entity with an investment in associate or joint venture accounted for using equity method. Okay? Consolidated financial statement are the financial statement of a group in which the asset, liabilities, equity, income and expenses, and cash flow of the parent and its subsidiaries associated or joint venture are accounted for either at cost method, alam nyo na yan, di ba? At in accordance with PFRS 9, ito yung mga financial asset at fair value or fair value through profit or loss or through other comprehensive income and under equity method under PAS 28. Sige, review lang natin yung mga accounting treatment for different types of control or criteria pala. Accounting treatment required at each level of reporting for consolidated financial statement. Alam nyo naman, pag subsidiary, kailangan may control, di ba? 51% or more. Investment in separate financial statement daw. PAS 27, investment is measured at either cost or financial asset fair value, FBPL, FBOC, or equity method. PFRS 10, investment is eliminated and net asset of subsidiary are consolidated with those of parent. Requirement treatment in group, full consolidation. Alam nyo na yan, di ba? Ito yung pinag-aralan natin in previous topic natin. Associate. Pag meron kang significant influence, meron kang 20% to 50%, di ba? Under PAS 27 and PAS 28. Investment is carried at cost, PFRS 9, using equity method. PAS 28, PFRS 10, investment is accounted for using the equity method. Tandaan, pag subok ng parent, pag associate ka or in joint venture, pwede kang i-measured at cost and FBPL. Pero pag kinonsolidate kayo, kailangan naka-equity accounting na yung investment in associate nyo, ha? Same as joint venture. Yung associate, pare sila ng treatment. Kailangan naka-equity method. Sige nga. Investment each, none of the above. Asset held for accretion of wealth. Tandaan, ito yung mga latak. Ibig sabihin, hindi ka umabot sa significant influence kasi wala kang control. Nominal lang yung share mo under PFRS 9. It's either OCI or PL. Pag PL, syempre sa profit or loss, mapupunta yung gain or loss kung may fluctuation sa market. Pero yung sa isa naman, saan? Sa other comprehensive income. Sige nga, gawin natin yung activity 3. Answer the following. On January 2, 1993, Well Company purchased 10% of Rhea in outstanding common shares for 400,000. Well is the largest single shareholder in Rhea and all of Well officers are in Rhea's board directors. Rhea reported net income of 500,000 for 1993 and paid dividends of 150,000. The fair value of the investment on December 31, 1993 is 450,000. In its December 31, 1993 balance sheet, what amount should be reported as investment in Rhea? Teka ha, binili mo siya January 2, 1993, which is the beginning of the year. 10% of Rhea, diba? Outstanding common shares of for 400,000. Well is largest single shareholders in Rhea and all of Well's officers are in Rhea's board of director. Rhea's reported net income of 500,000 for 1993 and paid dividends of 150,000. The fair value of the investment on December 31, 1993 is 450,000. In its December 31, 1993 separate balance sheet, what amount should be reported will report as investment in Rhea? Sige. Depende kung ano yung tanong. Pag at cost method, ito yan ha guys. Sige ha. Pag at cost method, yung changes of fair value ay hindi natin i-record. Ang i-record natin impairment loss. Tandaan mo ha. So kung 400 natin siya nabili, 400 siya hanggang ma-impaired siya. Naintindihan? Yun ang under cost. Pero kung may dividend siyang binigay, kunyari nagbigay siya ng 150 dividends, di ba? Pero syempre 10% lang share natin yan. Yung 15,000 ay dividend income natin under cost method. So therefore, na-conclude natin sa cost method pala, yung changes in fair value is disregard or no entry tayo dyan. Pero pag may na-receive tayong dividend, yung dividend income na ma-receive natin ay dividend income pa rin. Sige. Under fair value method naman daw. Pag syempre, alam niyo naman, pag fair value method, malamang kung ano yung fair value niya, doon natin siya i-record. Kung nabili natin siya ng 400, tapos naging 450,000 yung kanyang fair value at end of the year, syempre may increase na 50k. Yung 50k, depende kung ano natin siya na-record. Pag investment in FBOCI, syempre yung 50 gain na yun ay hindi pupunta sa profit or loss. Pupunta siya saan? Other items of comprehensive income. Pero, pag FBPL siya, yung 50 na difference na yun is, saan mo pupunta? Sa profit or loss. Tapos, same treatment for dividends. Lahat ng dividends na ma-receive mo is dividend income mo. In this case, 150 times mo lang sa 10%. Yun yung income mo, 15,000. Under equity method, di ba, naturo ko naman paulit-ulit. Ang income nila is magi-increase yung value ng investment mo, tapos yung dividends naman na ibibigay nila is treated as return of capital. So, 400, tingnan natin yung solution. 400 yung initial cost, tapos 500,000 na net income ng company times 10% kasi nga yun yung kita, share mo sa kita niya, minus mo lang yung 150,000 na dividends paid nila, pero 10% lang sa'yo. So, ang total is 435,000. Easy, di ba? Tapos na tayo sa activity 3. O, gawin nyo yung activity 4. Tapos, activity 5. Check the understanding. Use the following information under next 4 question. Bandolin Company had the following investment transaction during 20x1. Acquired 80% interest in Zaskar Inc. for 4 million on January 1, 20x1. Zaskar reported profit of 40M and declared dividends of 1.2 during 20x1. The fair value of the investment in December 31 is 4.8. Okay. Acquired 20% in Goat Company for 400,000. On July 1, 20x1, transaction costs during incurred amounted to 80,000. Goat reported profit of 8 million for the 6 months ended December 31, 20x1 and declared year-end dividends of 800. The fair value of the investment on December 31, 20x1 is 420. Okay, ito yung mga nangyari. Bandolin policy is to measure investment in subsidiary at cost and investment in associate at fair value through profit or loss in a separate financial statement. Wala muna tayong pakialam sa consolidation, di ba? Ay, meron pala consolidated yung tanong. Pero ito yung sinabi nila. Si investment in subsidiary naka-measured siya at cost. Tapos naman si investment in associate naka-measured siya at fair value. Sige. How much is the carrying amount of investment in subsidiary in December 31, 20x1 in consolidated financial statement? Anong sagot? Malamang edi 0. Chinek ko rin para sure. Pero 0 syempre. Kasi nga 'di ba, pag kinonsolidate sa consolidated financial statement, yung investment in subsidiary account is eliminated. Tama? Kasi wala kang investment, yung asset and liabilities mo ay i-assume ng entity, 'di ba? So, pasa ko na yung number 1. Number 2, how much is the carrying amount of investment in subsidiary in December 31, 20x1 in separate financial statement? Binili mo daw yung 80% for 4 million on January 1, 20x1. Zaskar reported profit for 40 million and declared dividends of 1.2 during 20x1. The fair value of investment in December 31, 20x1 is 4.8. Tandaan natin, 'di ba? In separate kasi to financial statement, hindi consolidation or meaning sa parent na financial statement. Ano daw niya measured at cost. So syempre, kung magkano lang yung cost niya. Okay, no? investment in subsidiary at cost. Hindi gagalaw yung fair value niya. Okay? Kung ano kasi yung sinabi sa problem, yun yung gawin natin. Number 3. How much is the carrying amount of investment in associate in December 31, 20x1 separate financial statement? Ano daw niya mineasure? 'Di ba? Ang investment in associate measured at fair value through profit or loss. Yung carrying amount niya, edi kunin natin yan. 400,000 mo binili. The fair value of investment is 420,000. Yun, 420,000. Siyempre, pag tandaan, madali lang. Pag cost, kung magkano binili, unless impaired, at cost siya. Pag fair value, malamang, yung fair value niya doon sa reporting period, yun yung carrying amount niya. Yun yung fair value niya. Kasi nga, fair value, di ba? Alam niyo naman na yun eh. Tapos, pag equity method, yun yung at cost initially, plus mo yung share mo sa income, tapos, i-minus mo yung share mo sa dividends. Okay, yung huling tanong. How much is the net investment income recognized in 20x1 separate financial statement for the investment referred above? Ibig sabihin, pag separate, di ba, sa parent, ulitin natin ha, naka-cost method, ito. Yung una, tapos naka-fair value method, yung investment in associate. Compute natin ngayon. Siyempre, di ba, pag at cost method, kunin lang natin yung sa dividend. So, ang share lang niya is 800,000 times 20%, so 40,000. Doon naman sa naka-fair value method, edi yung change sa fluctuation ng fair value, which is 420, ay from 400, naging 420, so 20,000. Tapos, ano pa? Transaction cost is expense. Tandaan nyo yan ha. So, ang total income is ilan? Ay, mali pala, sorry. Ito yung sa investment in associate mo na. Dividend revenue, 800,000, 40,000. Unrealized gain, 420 minus 400. So, 20,000. Tapos yung transaction, yung 100,000 is pertaining pa lang sa investment income dun sa investment in associate. Tapos, yung dividend revenue dun sa subsidiary, kasi at cost method siya, wala tayong pakialam sa iba, dividend revenue lang or impairment loss. Since wala naman, yun lang, 1.2 times 80%, 960. So, ang total is 1,060,000. Okay na tayo for day 21 separate financial statement.